to goldstocktrades.com. Today we have back here with us David Salisbury. David is chairman of Passport Potash. Passport can be traded as PPI on the venture, and it also can be traded as PPRTF on the OTC. Thanks, David, for being here with us today.
It's my pleasure to join you.
David, we heard a very significant announcement this week with the breakdown of negotiations between the Belarus Potash Company Cooperative and Uralkali. Some are calling it the end of the potash sector. Could there be? Do you think that may be a premature knee-jerk reaction?
Well, let me give you some long-term viewpoints. Number one, potash is a critical component to food production globally, and so there is going to continue to be a demand for potash. A lot of the constraints today on potash production have actually been somewhat in the pricing side. India, in particular, very, very sensitive to the price of potash, and so if what happens, as is stated by Uralkali, that some of those prices are going to go down, doesn't necessarily mean that the demand is going to stay down. It's likely to increase. And in the long run, potash is going to become even more critical to improving food production as population increases and land mass per capita decreases. Therefore, it's going to be more critical to get high yields from the existing land mass. So from a long-term perspective, potash is going to remain a critical component to the food production chain in the global scenario. On the shorter term, this recent change is going to probably cause a bit of chaos in the marketplace. I think it's a bit too premature to jump off the ship or throw in the towel, however you want to look at it, on the potash sector, because there are some things that are going to have to get settled out there. If I were a long-term contrarian investor, I would say this is a great opportunity to get into the market, given low prices and the what I would call a knee-jerk reaction to what's happened. Now, there will certainly be some impacts, but I think it's going to take a little bit of time to sort out exactly what those are.
David, let's talk about the effect on some of the other majors. Can you give us a little bit of a background on this cartel and the players that are involved and how this may affect the majors?
Well, certainly the cartel has been, the cartels, I'll put that in a plural, if you will. It's been price before production. So, I mean, that's the phrase I think that was used in some of the press releases. They've been able to control production levels to demand a certain price. And, that works to some degree. It's obviously kept the prices higher, but I think in the longer run, all producers are going to see that there's a certain amount of input costs that have built up over years, and there's no indication that those are going to go down. So, the producers, all majors, are going to have a level of pricing that they're going to have to maintain in order to be able to make a return on their shareholders' investments. And so I think in the long run, you're going to see prices that may see a dip for a time, but I think you're going to see those moderate. And while they may be below the current levels, they're not going to go below. I don't think you're going to see anything go below 300, or if you do, it's a very short-term viewpoint, because they're going to have to sustain their production levels and their cost structures. So I think in the long run, you'll see that moderate to a decent level. So the advantage is to be in a low-cost position on the curve. So if you look at some of the majors, if you're looking at investments, new investments or expansions that are high capital cost, those you're going to have to look at very carefully. And so I think that's where, the project that I'm working with sits in a very good place, is that we've got one of the lowest capital costs per ton of production to come on board. and low cost as well in terms of our op costs. So that puts us in a position where I think we can compete quite well, particularly in the U.S. market, which is one of the largest markets in the world. We're located in the lower half of that market, so we can easily get to much of that market that imports 90% of its potash. We would only produce 25% of the total U.S. demand once we get to full production. And that's another thing about our project is that, we're in the early stages, and we're looking at a long-term ramp-up. We believe that as potash demand grows, that the production timing schedule that we've set forth matches quite well with that increased demand.
So from a longer-term perspective, and you've mentioned about this supply-demand curve, can we take a longer-term perspective and see why there may be a need for these lower-cost juniors, particularly Passport Potash, which has the advantage of being in the U.S. and located near major infrastructure and shipping lines?
Sure. I mean, the demand today is somewhere in the 55 million ton per annum range, and there's the estimates that I've seen, at least, project that by 2020 we would be up around 70 million tons. I think that's a reasonable expectation, again, given demand for food, yield increases. And so that 15 million ton a year increase is going to require either some brownfield expansion, and as I look at those costs, again, some of the brownfield expansions are on par with what our project is projected to go in at right now. So if you're talking about Uralkali putting out an extra 2.5 million tons of production, that basically matches, that's part of that 15 million ton component that's going to come online over the next few years. So it's still going to require, some growth, some potential. And so, again, I take a very long-term view to this and see where the future is, see where we are now. And so it doesn't give me a lot of concern that they see a 2.5 million ton production when the demand's going to be significantly more than that over that that next 10, 15-year period.
So let's focus on Passport Potash's project that you're chairman of. How is this project different, and what should investors be looking for when evaluating junior potash miners such as Passport?
Well, I think the biggest thing is capital cost. Our current project is slated to ramp up to 2.5 million tons over a period of 7 to 9 years, and we'll look at see how that matches up with the overall market economics. But our capital costs are, quite frankly, about half what many capital projects are for equivalent tons of production. So that puts us in a very good position, and that really is driven by the fact that we've got one of the shallowest deposit in North America at just 1,000 feet, where others are at 3,000 to 4,000 feet or even deeper, depending on where you look in the North American geographic regime. It's a relatively clean ore body, so the processing costs are standard, simple. We're going to use shaft access, room and pillar mining, so conventional mining. So we get a relatively high recovery from the in-situ material and a very high recovery in our process. So those are important things in terms of the cost structure. More importantly, I think, or just as important, is the fact that the opportunity for us to get into the U.S. market is ideal. We're located in Arizona. We have Burlington Northern Rail right on property. We can get into the market very inexpensively, comparatively importing from Canada or other offshore sources. And so we've got an excellent opportunity to get into a large part of the U.S. market with our product, and I think that gives us a strategic advantage that others won't have.
David, recently we've seen some funds come into the junior miners. Do you think the recent news could affect future financings and future strategic partnerships with funds?
Well, let me just share some insight that I have in a couple of recent visits to India, as well as discussions with Chinese markets. These people are looking for secure supply. They're very interested. I think the investments that have been made in Canadian projects that we've seen so far are to secure supply, not just simply to sit on the outside of the market and be a price taker. And they want to have a participation of ownership in these projects. And so I don't think this is going to change their viewpoint. Uralkali is simply going to be in the marketplace with more tons. But I don't believe there's going to be any opportunity for ownership in that project or some say in how the operations are run, project level financing, participation. So I think that element still remains out there, and I think it's still an important part of their viewpoint of the long-term market. So maybe this will change it, but I don't see anything that would, because they've been quite firm in their interest and their desire to be a participant, an active owner participant in the production of this for their own market. So I think it's still going to hold pretty strong that they're going to want to play in the right places in the right projects.
Well, David, thank you so much for being here with us today and for giving us some insights into some recent news. Passport Potash can be traded as PPI on the TSX Venture or PPRTF on the OTC.